Cryptocurrency. What is cryptocurrency? That's the number one question. Cryptocurrency is a digital asset. A digital asset. A digital asset that people can buy, sell, and trade all over the world. Not in America, all over the world. Cryptocurrency is a digital asset that can be bought, traded, and sold all over the world. Even in the smallest countries, they have access to cryptocurrency. Small countries, different countries, it's not America. In America, we got the banking system, the financial banking system. From top to bottom, we got a banking system in the USA. There's banking systems in a lot of countries, but there's no banking system in a lot of countries. And that's why cryptocurrency was created. For people who don't even use banks, don't even trust banks, don't want to have nothing to do with banks, credit unions, financial institutions, JP Morgan, Chase, Fidelity, there's millions of people don't want to have nothing to do with banking systems. Banking systems, hey, in the most part, they don't work for you, me, or nobody else. Banking systems work for themselves. The money they create, the money that they lend, the money that they take in, it's all about a profit for their self, the banking institutions. Cryptocurrency was created for the total opposite. It was created for us. For us. Okay? Cryptocurrency is a digital asset. The money in your pocket is a physical asset. A physical asset. The money, the change, quarters, nickels, dimes, pennies, them are physical assets. Your gold, your jewelry, your diamonds, your pearls, your house, them are all physical assets. You can touch them. I can touch this ring. I can touch this gold. I'm standing in my house. These are all physical assets. Physical. Crypto is a digital asset. Physical asset. The government in the United States own this. They own it, not you. It's a bill that's out there that was created for buy, sell, and trade. But they own it. They own it and they regulate it. George Washington is on the dollar bill. Lincoln is on the 5. Here go 100. These physical assets, physical, you can touch them. They own this. China has a banking system. They own that Chinese dollar. Japan have a banking system. They own the Japanese yen. Canada has a banking system. They own the Canadian dollars. All over the world. Germany, Switzerland, Italy, wherever, Australia, they own it. There's a government over the money financial system in big countries. They own it. They regulate it. You can use it for all kind of things. They own it. They regulate it. Not you. Crypto. Let's use this for an example as a crypto coin / token. Cryptocurrency was created for us, not the banking system. It's peer to peer, person to person. We own this. They can't tell us what to do with it. They can't regulate it. They can't keep up with it. They don't own it. No country in the world owns it. This is a unregulated currency, digital currency. Okay? It is categorized as a decentralized currency. Decentralized currency, not centralized. What I just showed you, the $100 bill, that is centralized money. They own it, they keep up with it, they track it, and when it get old and all messed up, they destroy it. That $100 bill I just showed you, they regulates it. They own it, they distribute it, they produce it. When it get all old and messed up, they destroy it. It's regulated by the government. This is regulated by nobody. That's the beauty of crypto. This is an example of a crypto coin, but it's not in the physical form like this. It's digital, okay? Now, example, how to buy into or purchase a fraction of a coin or the whole coin. I can break this coin into 1,000,000 pieces. You can buy 1 little piece, 5 little pieces, 10 little pieces, so on and so on. Or you can buy the whole coin. Say, this is Bitcoin. Say I got 20 million of these. Say I'm the creator of this coin. Say I created 20 million. You can buy whole coins, whole Bitcoins, or you can buy fractions of Bitcoins. Meaning, if I created 20 million of them and I release them to the public, you can buy the whole thing, parts of it, pieces of it. Okay? You don't have to buy the whole thing. 20 million that I made, I'm putting 20 million out there in the world. Say the coin costs $10 a piece. Remember, that's the whole coin. The price is $10 a piece. So if you give me $10, you know I give you the whole coin. If you give me anything less, then the price, the total price, is $10. If you give me anything less than that, you're not going to get the whole coin. You're going to get a fraction of the coin. You're going to get a piece of the coin. You're going to get a percentage of the coin. If this coin is $10 and I got 20 million of them that I'm releasing to the world, everybody has the same opportunity to buy in. $10 a piece, you can buy the whole thing. Say you give me $5. I will break this coin down the middle and give you half. Say you give me $2. I will break off your $2 worth. You give me $1, I'll break you off $1 worth. And the next person, and the next person, and the next person, and so on and so on and so on. Each coin can be broken down. Can be broken down in many pieces. You give me a quarter, 25 cents. I will sell you 25 cents of this coin. I will break you off a real small piece. You only spent 25 cents. Here's your 25 cent worth. You give me 50 cents. I'll break you off a small piece. Here's your 50 cent worth. Whatever you bought is what you own. If you give me the whole $10, I give you the whole coin. You give me $100, I give you 10 of them. It's simple math. When you break it down into fractions and wholes, whatever you give me is what you own. It's what you bought, it's yours, it's what you own. Okay? Now, this coin goes up, it goes down in value. If you bought the whole coin, You gave me $10. You have one full Bitcoin. You have the full coin. You give me $10. You give me 5. I break it in half. I give you half of it. You got half of this coin. Your $5 can go up. It can go down. This coin rise. Your $5 rise. This coin drop. Your $5 drop. You own whatever you purchase. You purchase half. You gave me $5. Your $5 can just go up and make you rich. Your $5 can go down and become negative. Cryptocurrency is a risk. Understand that it is a risk. It's a high risk and high reward game. It's a high risk and high reward game. The more risk you take, the greater your reward. You don't have to take many risks at all. You can purchase dollars. You can spend dollars. People spend thousands. People spend millions. You can start off as small as you want. It is a risk. So, understand that. The money you're going to invest into these coins, you can lose it. Okay? But the money you invest into these coins, you can get rich. Pay attention. Okay. That was a good explanation. I hope y'all understand that. Now let's get into it. Cryptocurrency are coins/tokens. People call them coins, people call them tokens. Cryptocurrency. Coins/tokens. That's what they are. Your first step will be to create your cryptocurrency account on whatever platform you choose. I use Coinbase. Coinbase. That's what I use. It's the best cryptocurrency platform in the world. They have the most security features of every company that lets you buy, sell, and trade crypto. They have the most security features. That's why I use them. But you got Robinhood, Crypto.com, and a few more. Number one is to choose your platform of choice and create your account. Now, to create an account, you know you're going to need a payment method. Visa, MasterCard, checking account, saving account. Banks, credit union, don't matter where your account is. Don't matter where your money's coming from. Long as your money is legal to spend. You're going to need a payment method. You're going to download the app, whatever platform you're using. I use Coinbase. And I suggest that's what y'all download. Now you download Coinbase. You sign up. Simple. Go through the steps. Sign up just like signing up for anything else. Link your payment method. Link it to your Coinbase account. Okay? B. Link your payment method to your platform of choice. That shouldn't be so hard to do because I'm pretty sure everybody know how to open an account and link their payment method. What you're going to do after you got your account and your account is linked is you need to decide the amount of money that you want to invest. You make that decision. What you deposit into your crypto account is what you have to spend on coins/tokens. Okay? So get your head around it, count your money, check your pockets, see how much you can spend, how much you can invest. Don't invest money that you're going to need back pretty soon. Don't invest money that you're going to miss. Invest what you're not going to use, what you don't have to use. Invest what you do not need at the moment and ain't going to need for a while. Okay? Choose your amount. Okay? Research. Do a little research. You got to know what you invest into. You need to know what you invest into. Each coin, each crypto coin that's on the market today, it comes with a thing called a white paper. Okay? Coins come with a thing called a white paper. Basically, it comes with the instructions of what the coin is. Okay? Each individual coin that's created and put on the market for a buy, sell, and trade comes with a white paper. A white paper is basically the instructions of the coin that you are interested in. If you go to Walmart and you buy a radio, don't a radio come with instructions? Anything in the world that you pretty much buy, don't it come with instructions? If you buy a car, it comes with an owner's manual. Okay? So each individual coin comes with a thing called a white paper. The white paper was published when the coin was created. The day that the coin or token was created, it was a white paper that was published with it. You need to read the white paper. They're not long. It's probably just one page, one front. The white paper explains every detail of the coin. When it was created, why it was created, how it was created, what's the purpose of it, what's the functionality of it, what they wanted to do, what they intended to do, and what they hoped for it to do. The white paper will tell you all of that. So you need to look into whatever coin you trying to buy or invest in. Read the white paper. It'll tell you a lot about it. That coin makes sense to you, the functionality of it, what the purpose is, what the intention is, when it was created, why it was created, and who created it. Read it. It makes sense to you, look like something that's a winner, go ahead and invest. That stuff on that white paper don't make any sense to you, look like it might be a scam, move on. Research your coin. Read the white paper that was published with it. It's right there for you to read. When you look into the coin, when you click on the coin, you can read the white paper. If you're interested in the coin, you can Google the white paper. Read about it first. Then make your decision. Research your coin / token. Read the white paper. Basically, read the instructions that came with it. You'll have a very good understanding or a better understanding of what this coin / token is. E. You're going to have to learn to keep your feelings out of your investments. I'm going to drill that into your head. Keep your feelings out of your investments. This is no place for feelings. If you're the kind of person that is attached to money emotionally, it go up, you smiling and happy and jumping for joy. Your money starts to shrink and go down. You over there flipping out. Oh, I should have never did this. I should have never did this. I don't know why I put my money in this stuff. You one of them people that's going to get emotional and start crying and, just doubting your own self for even investing it. I should have never did this because your money's shrinking. You looking at it on your computer, you're looking at it on your phone, and it's shrinking. This ain't for you. Keep your feelings out of this. This is not an emotional thing. This is real life money. If you can't stand to lose money, cryptocurrency ain't for you right now. Just go ahead and leave it alone. You can't stand to lose it, leave it alone. Because you will lose it in some cases. And in a lot of other cases, you will gain. It's a ride. And it go up and it go down. If you don't want to get on this ride, stay on the sideline. You're too emotional to lose money. You cry about it. You complain about it. You wish you never did it. Stop right now. This ain't for you. Keep your feelings out of your investments. Okay? F. Know when to buy, know when to sell. That is key. You got to know when to buy. You got to know when to sell this stuff. And as you start off, it's going to be a little complicated, but it's very easy. The more you practice with it, the more you use it, the more you study it, the more you learn it, it becomes easy. You'll know when to buy, when to sell. But that's a very big point. Know when to buy, know when to sell. Okay? I'm going to draw a chart, a visual chart, and explain exactly what I mean. Know when to buy, know when to sell. Now let's get into this chart. Okay. Pay attention. Cryptocurrency. It swing up, it swing down. It swing up, it swing down. When you're looking at your screen, computer screen, looking at your phone, when you're looking at your coins, and you see that up and down, up and down, up and down. Crypto. Now, this is basically your coin timeline. This is your timeline for your coins. The coins that you bought into or the coins that you bought full coins. This is your timeline, okay? Now, we're going to use an example of Bitcoin. Say this is Bitcoin, remember? We're going to use an example of Bitcoin. Bitcoin is at 80,000 right now. We're going to use this point, Bitcoin. 80,000 today. That's where it's at today. So, say you bought in 2 months ago at 60,000. That was down here. 60,000 will be down here. Say you bought in 2 months ago, 60,000. Today, you at 80,000. Okay? And this is BTC, Bitcoin. And that's another point. All coins has initials. They are labeled with initials. If your name is Mary Jane Brooks, your initials is MJB. Okay? So if you're looking at Bitcoin, use the initials to find it. All you got to do is type in the initials. Or you can type in Bitcoin. But the initials would be BTC. Bitcoin. BTC. Like the initials of your name. Bitcoin. BTC. Okay? I think that's easy to understand. Now, today's Bitcoin is 80,000. You bought in 2 months ago at 60,000. You 20,000 up. Okay? Now, know when to buy, know when to sell. When you buying into these coins / tokens, you got to know when to buy. That's more important than knowing when to sell. That's more important than knowing when to sell. It's self-explanatory that a person would want to sell up here. You invested when it was 60,000. You might have bought $100 worth. You got $100 worth of Bitcoin. Your 100 might be 200 now. It went up. It's easy to know when to sell. You see your money grow. You want to take it? Take it. It's more important to know when to buy. And when you buy, it's when it dips. There's a term in crypto called the dip. The dip. It dips. Here it is right here. This is the dip. Up, down, up, down, up, down, up. And then it dipped. You see that? You want to buy at the lowest point that you can. Always want to buy at the lowest point that you can. You get in at the lowest point that you can. You see what happened 2 months later? So if you got in at the lowest point that you can, and today is 80,000, you got in when it was 60,000. Your profit margin just got way bigger. If you can catch the dip. Always catch the dip. Try your best to catch the dip. It makes perfect sense. If you buy low and you sell high, you have a great profit. That's common sense. So try to buy low, try to buy low, try to buy low. Sell high, sell high, sell high. Try to buy the dip, try to buy the dip, the lowest point. And there's your point. That's not the lowest point. That's not the lowest point. That's not the lowest point. You see where the lowest point is. Try to catch it. The lower you get your coin, the lower the price that you can get your coin at, the greater the profit when it rises. Try to buy the dip. Always buy on the dip. Always. The dip. Okay? Now you can buy in at any point. Any point. You can buy in here. You can buy in here. Here. It doesn't matter. Here. It don't matter where you buy in. But if you see this chart, and while you're looking at this chart, you see your best option would have been to buy in where? Here is a good place to buy. But your best option would have been here. Look at your profit increase. You can buy in here, you can buy in here, you can buy in here, you can buy in here. You can buy in anywhere. Don't matter. But you're looking for profit margin. So buy at the lowest point. Buy at the lowest point. Catch the dip. Your profit increases when it rises. Okay? Know when to buy. Know when to buy. know when to sell. It's easy to understand when to sell. Who wouldn't sell it at 80,000 when they bought in 2 months ago at 60,000? You want your money, you want your profit? Cash out, sell it, withdraw your money. It goes right back to whatever original payment method that you linked. It's just a transaction. When you buy in, the money you spending is going to come out of your crypto account, and you're going to get whatever percentage that you bought of that coin. You spend $5, you're going to get $5 worth of the coin. If the coin is $5, you're going to get the whole coin. Okay? Take a look at that. You want to buy here. I'm going to drill that in, y'all. You want to buy the dip, and you want to sell when it get high. Now, you can sell anywhere, same as you can buy anywhere. You bought in here, you can sell right here. Say it was 60,000 when you bought in. Now it's 65,000. Here, at this point, BTC. We're using Bitcoin. Okay? You bought in at 60,000. Once it rises, you can sell it right here. Take it. Take your money. 60,000, it's at 65. Take it. You can sell here. Say it's 70,000. You started at 60 if you catch good dips and good low points. You can sell here, take your profit. If it rises, you can sell here, take your profit. Today, it's over 80. That's today. Okay? Over 80. You can sell anywhere to take your money. Take your profits. And that's another point I'm going to get to about taking profits when you got them. Now, you're probably saying, Carlos, show us some numbers. Show us some numbers. Because this is easy to follow right here. Now I'm going to get to the numbers. Explain to y'all the numbers and how to read them and how to understand them. Okay? Now, you're investing into Bitcoin. Bitcoin is $10, for example. $10. Say you spent $2. You know you're not going to get the whole coin. You didn't buy the whole coin. You bought into. You bought into. You bought into the coin. Here's your coin. You can buy the whole thing. You can buy pieces. Look at it as a pie. A Domino's pizza. Here it is. The coin is $10. You can buy the whole thing. You can buy 1,000 of them. $10 times 1,000. That's what you're going to pay if you want 1,000 of them. You can spend $2. You're going to get this piece. Okay? You only spent $2. Now, if you only spent $2, that means you are buying into the coin. You are not buying the coin. You buying into the coin. You spent $2, okay? You bought into the coin. This is yours. That's all you own. Okay? Now, the numbers is very simple. If the coin is $10, you bought $2 worth. That's yours. You only got this slice. So, if you bought into the coin, you spent $2. You don't have the whole coin. You have a percentage of it. You have a fraction of it. Your $2 is going to come out to For example, you know you don't got the whole coin. So it can't be a full number of what you own. You didn't buy the whole coin. You bought $2. So the percentage of this coin that you have, it can't be 100%. You don't have 100% of it. You didn't give me $10. You gave me $2. So you don't got 100% of this coin. You got $2 worth of this coin. Your percentage that you own for your $2 will come out to be something like this, for example. 0.000000001. It's very simple. The coin is $10. You spent $2. That's yours. You own 0.0000001% of this coin. Percent. That's what you own. For example, the coin is $10. If you give me $10, this coin is yours. You have the total, one full coin. It's yours. You don't have no partial of the coin. Right here, you bought the whole coin. You got 100% of it. Actually, I should have put another zero. Follow me. You have 100% of this coin. It's yours. Now, I think that's simple to understand. If you don't spend the whole $10, you get a fraction of the coin. I don't care if you spent $1, $2, $3, $5, $6, $7, $8. The coin is 10. If you spend anything less than 10, you get a percentage, a fraction of this coin. This is your piece. Okay? This is your piece. You spend the whole $10. Price is 10. You spend the whole 10. This whole coin is yours. You got it all. You got it all. Okay? The whole coin belongs to you. And you can buy more than one. Until you spend the whole $10, you're going to get a fraction. You spend $20, you're going to get two of these. Whatever, if you buy and spend the full price, whatever coin it is, some coins is $100. Some coins is 1,000. If you spend 1,000, you get the whole coin. If you spend 500, you're going to get half of your coin. You're going to have 50% of it. You spend the whole 1,000, for an example, some coins is 1,000. Some coins is over 1,000. Bitcoin is 80,000. So, whatever coin it is, whatever the total price of that coin is, if you spend the total price, you get the total coin. You spend less than the total price, you get less. You get what you bought. You spent $2, this is what you get. And there go your percentage of how much you own. You only own this much of it. Spend the whole total price, you got the whole thing. $10. If you spend $100, you get 10 of them. $100 is this coin, total coin, times 10. You get 10 of them. Simple. There's how you determine what you own of the coin. You own the whole thing, or you own a fraction of it. You spent the whole total price here and got the whole thing, or you spent $2 and got a piece. Now, it don't matter. Your piece is your piece. Your coin is your coin. You spend $10, you spend $100, you get 10 of them. They still go up and down, just like this. It's gonna do the same exact thing. Your coin rise, your coin gonna fall. Know when to buy. Try to buy at your lowest point. Know when to sell at a good profit amount. Whether it's you spent 60 G's, you bought in at 60 G's. You can sell at 65, you made a profit. Sell at 70, you made a profit. Sell at 80, you made a profit. Now, this coin can also fall. It can also plummet. That's the risk. This is a risk. You see how it go up? It'll also come down. And you can be underwater. Follow me. A coin goes up and down. It can fall. And it can fall. Say, same example. You bought in Bitcoin here at 6,000 here. Same example. This is Bitcoin. You bought in at a great point because it rose. You did. It could also fall. And now your $60,000 Bitcoin went to 30,000. Here. It can't fall. You bought in at 60,000. It went up to 70,000 here. It went up to 80,000 here. 85. You got to know when you want to sell. You bought in here. It rose to 70. You could have sold it. It rose to 85. You could have sold it and made your profit. A week later, boom. Your coin went down to 30,000. You bought in at 60. You are half of what you invested. You are at half. That means you are in the red. That means you are down 50% of your cash. You started at 60,000. That was 100% of your money. That's where you started. You went up to maybe 60,000. You went up to 105% right here. Right here. You say you went up to 125% up here. Your 100% turned to 112% here. You could have sold it. You a 12% increase from your 100%. Say your 100% turned it to 135% here. Because it's 85,000 here. You started at 100%. You increased. When it got to 70,000 here, you got 112%. You are 12% increase. 85,000 here, that's 135% increase. This is just an example. Follow me. You are 35% up. You started with 100%. Whatever you initially invested, that's the starting point. That's your starting point. Start point. That's where you at, right here. 60,000 is what you what's the price of it, you bought in. 100%. It went up. You got 12% increase. It went up some more. You got 35% increase now. Next week, it can drop down to 30,000. Now, from your starting point, 100%, 60 G's, you are down 50% on your money. Simple. Now, if you're the type of person, you started here, it went up, you was happy. You got a 12% increase. It went up some more. You was happy. You got 35% increase. And then next week, it falls. You done went into the negative, basically. If you're going to start crying and I should have never did this, I should have never did this, I can't do this, I don't want to do this no more, then crypto is not for you. Because this can happen. It's a risk. It can go further. It can go further. It can go past that. It could keep going, is what I'm saying. It could keep dropping. And you'll go lower than the 30,000. You'll go lower than your 50%. It can happen. But what also can happen is here. You get in at a low point. 60,000 is where you got in at the lowest point. It rose to 65. Then it rose some more to 70. Then it rose to 80. That can happen too. Overnight. You can wake up and your investments be through the roof. You can wake up and your investments be through the floor. What you want to do? Know when to buy, know when to sell. Okay? Don't be greedy. ELG. Don't be greedy with this. Don't be greedy. Greed is in the Bible. It's actually a sin. So if you're greedy in any aspect of life, you're going to regret it. Don't be greedy with your investments. If you started at the lowest point, you got in at a low point. It rose here. 65,000. You can take your profit, man. It rose here to here. You can take your profit. It rose here. You can take your profit. Just don't be greedy. Don't sit around ignoring the fact that you already winning. Right here. Don't ignore the fact you already winning. If you ignore the fact that you already winning, that means you being greedy. That means you want more and you already winning. That means you wanted to do this. You started here. You could have cashed out here, took your money, cashed out here, took your money, cashed out here, took your money. But no, you think or wanted to go higher. You being greedy. And if you want to be greedy, you are making more of a risk than you already done took. It's already a risk. And if you want to come into this game being greedy, you just turned your risk up. Don't turn your risk up. Don't be greedy. Take your profit when you got them. Take profit when you got them. I can't drill that in your head enough. Take your profit when you got them. If you got in at a low point and it went up, take your money. Being greedy means you want it to go higher. Hopefully, it will for you. You believe that? Don't sell it. Hold on to it longer. You're going to see what happens. You will see. You want it to go higher and not take your profit? Look how many points you could have took profit. You want it to go up more. Great. It could do this. You're going to say, I should have took my money when it was 70,000. I should have took it when it was 80. I should have sold it when it was 65. Man, I thought it was going to go higher and higher and higher. And look what happened. You could have sold it at 65,000, 70,000, 80,000, 85,000. But you wanted to be greedy, and next week, look what your greed got you. You down. And you was way up. Don't be greedy. Take the profit when you got them. A profit is a profit. If you spend $1 on a coin, if you spend $1, your dollar can turn into $2. Ain't that a profit? You are 100% up right here. You think that dollar gonna go higher than 2? You think it's gonna go to 200%, 300%? You believe in that coin. You are taking another risk. You are taking more of a risk. But that's your prerogative. That's your choice. That's your decision. If it's you invested $1 and it turned into $2, you are up 100%. Me, I sell. I won $1. You want to know why I would sell? Because I would take my dollar profit and just buy back in. If I'm up 100%, $1 turned into 2. I take my 2. I take my 2. I would take my $2. I would put my dollar back in my pocket and reinvest the dollar that I profited. I will reinvest the profit. You don't have to be greedy. If your money doubles, it's 100%. $1 turned into 2. I'm going to sell that. I'm going to take my 2. That means I got my dollar back that I started with, and I got a new dollar to put back in. Simple. Take your profit when you got them. You go up, you can sell anywhere when you up. Because you take your profit, put the money back in your pocket that you invested. You can reinvest the profit that you made. You still in the coin. Take the profit, reinvest some of it back into the same coin. You don't have to be greedy. Know when to buy, know when to sell, know when to take your profits. Cryptocurrency / tokens / coins. Here you go. It's very easy, very simple to understand. Each individual coin has their own price. There's coins on there for pennies. There's coins on there for 80,000 like Bitcoin. What you need to do is look them up, research a little bit. It's not even going to take you 10 minutes to read the white paper. Bitcoin comes with a white paper, the instructions. Read the instructions. See if that something makes sense to you. Read the white paper and see if that something makes sense to you. If it's something that you believe in, you see that it's beneficial or anything. Those are some coins you will want to invest in. If you read the white paper and it's something that don't make sense to you, it's something that you really don't believe in, it look like it's a scam, then don't invest no money into it. Because a lot of them are scams. And I got to let y'all know that a lot of them coins, tokens are scams. It's over 20,000 coins or tokens. It's over 20,000. Most of them are scams because people who got real computer knowledge, it's easy to create a fake coin. They all over the world. Somewhere in a little hole in the wall cave, but they got a computer. It's easy for them to create a fake coin if they real knowledgeable of how to do it. They can create a fake coin and get it up on them platforms. People will start investing in them. They get a lot of money to pour into the coin. People buying them, people buying into them. If they are crook, they'll wait till the money pile up, and then snatch the whole thing. Run off with everybody's money. That's easy in crypto. It is scams in crypto. But if you do some research about the coin that you're looking into, read it, Google it, you'll see. Is that something you should invest into, or is that something you should stay away from? Now, that's on you. It's your money. If you ain't going to do research about where your money finna go, then you shouldn't do this. You don't like to read, you shouldn't do this. And it's not a lot of reading. Each coin comes with a white paper. The paper is just probably one front. That's it. Take profits when you got them. Okay? You learned here about percentages. If you don't buy the whole coin, the coin is $10. If you spend $2, you get one slice. This is how much you got of it. 0.0000001. You own that percentage. You can sell that slice. You can sell what's yours, and only what's yours. You can only sell what you own. The coin is 10, you spent 2. You got one slice. You can only sell your slice. The coin is 10, you spent 10. The whole coin is yours. You can sell the whole coin. If you spend 100, you get 10 coins. You get 10 full coins. You can sell all 10. You can only sell what you own. Simple. Now y'all take a look at that for a minute and let that sink in. Now, I hope they gave y'all a little time, screenshot it, then zoom in. Now, the last point I want to make is don't overdo it. It's very easy to overdo it. And I'm going to explain exactly what I mean. Don't overdo it. Don't overdo it. Please don't overdo it. It's real easy to overdo it. I had to learn that the hard way. So I'm going to keep y'all from going through what I went through because I overdid it. I overdid it a lot, but I learned not to. So I'm going to teach what I know now. Don't overdo it. Meaning, you got coins. There's thousands of them. There's probably 20,000 of them. I don't know what kind of money you got. I don't know what kind of money you're finna invest. Just don't overdo it. Okay. You can take the same $100 and you can buy into 100 different coins. If you spend $1 a piece, you can buy 100 coins. Buy into 100 coins. Or whatever. If you spend 50 cents a piece and you got $100 to invest, you spend 50 cents a piece. You just bought into 200 coins. I wouldn't do that if I was you. Because you can break your $100 bill down and buy a whole lot of coins, that don't mean you should. Of course you can break this $100 bill down and spend 50 cents a piece. That's 200 coins. $100 divided by 50 cents is 200. You don't need 200 coins. Why would you need 200 coins? That's too much stuff to look at. There's too much stuff to keep up with. There's too much stuff to try to wrap your head around. When should I sell these ones? When should I buy these ones? When should I sell these? When should I buy some more? When should I sell? You got 200 of them. You trying to manage? That's overdoing it. You can take the same $100 and buy 5 coins. You can take this $100 and buy 5 coins, right? That means you spending $20 a coin. 100 can get you $20 in each coin. You only got 5 coins. You can spend $20 a piece. Okay? Now, this same $100, you can take $20 a piece and buy 5 coins. Now, all you got to do is look at 5 things. $100, you break it down how you want to break it down. It's your 100. But, for example, you can take that $100 and spend $20 a piece. You got 5 coins. That's very easy for you to manage. 5 is easy to manage. Or you can take that same 100 like I just explained. You can spend $1 a piece. You got 100 coins. You can spend 50 cents a piece. Now you got 200 coins. I don't think you're going to be able to keep up with all of that. It's a headache. So, don't overdo it. Keep it simple. Don't overdo it. Keep it simple. Okay? The money that you go invest, don't break it down to the lowest amounts and start buying coins. I wouldn't do that. It's something I learned the hard way. Take your 100, get maybe 5 or 6 coins. Don't take your 100 and break it down to $1 a piece and get 100 coins. Break it down to 50 cents a piece and get 200 coins. You're not going to be able to keep up with all of that. You can't. It's too complicated. So, let's recap. Cryptocurrency is coins/tokens, digital assets. Let me put that here. Digital assets, not physical. That's what they are. They're assets that you own digitally. Cryptocurrency is coins, tokens, digital assets. A, create your crypto account. Platform of your choice. I use Coinbase. Create your crypto account, platform of your choice. Link your payment method to your platform. Link it. Credit card, debit card, checking account, savings account. You can use banks, credit unions, even people who have, different kind of accounts. Just link you a payment method. The payment method you link, that's how you're going to transfer your funds into your crypto account so you can buy. And when you sell your crypto, that same payment method is where you're going to withdraw. When you sell your crypto, you're going to withdraw your money. It's going to go back to that same payment method. If you use your debit card, it's going back to your debit card. Your money going to your debit card. Use the checking account, it's going back to your checking account. So on, so on. Create your account, choose your platform, link your payment method of choice. Choose the amount you want to invest. That's your choice. Only invest what you're not going to miss and what you don't need. Research the coin or token. Read the white paper. They come with white papers. Tell you every detail. Basically, the instructions and what the purpose is of the coin. It's going to tell you. Keep your feelings out of your investments. There's no room for your feelings. If you can't stand to see your money do this over here, drop, and now you 50% of what you started with. If you can't stand to see that, leave this alone. Keep your feelings out of your investments. It's a roller coaster. It go up and down. Know when to buy and when to sell. I explained that. Don't be greedy. I explained that. Your money can go up here. You could have sold and got your profit. But you want to be greedy. You want it to go farther up. It could turn around and drop down. So don't be greedy. If you see a profit and you want it, take it. Don't test the market. Don't test the coin. The coin will reverse on you if you want to keep testing it. Don't be greedy. Take your money. Take your profits when you got them. Don't overdo it. Don't take your money and break it down to simple nickels and dimes and quarters. Don't take your money and break it down to no 50 cents. You're going to end up with a whole lot of coins that you can't manage. It's too complicated to manage that much. Don't overdo it. Keep it simple. What you got to invest, look up some good coins. Take your money, get about 5, 6, 7 of them. That's all you need. You get to overdoing it, you ain't going to know when to buy. You ain't going to know when to sell. You ain't going to know which ones to keep. You ain't going to know which ones to trade. You ain't going to know which ones to. It's too complicated. It's going to get real complicated if you overdo it. Keep this simple for yourself. Don't get a whole lot of them. Cryptocurrency 101. Stay tuned for the next video, part 2. Good luck investing.